Welcome to this video day, which is all about Forex money management. What we're going to be doing is looking at the basics of a stop loss strategy, which can help you preserve equity and at the same time help you maximize profits. Now, in terms of beginners in particular in the Forex markets, they don't think about a stop loss strategy or proper money management. They kind of do it as an afterthought. They're more interested in perfect market timing and getting in the market than they are about getting out the market. But placing your stop loss is as important, if not more important, than your actual trade entry. Why? Well, you have to place a stop which will obviously give you good protection, but it must also be in a place where it doesn't stop you out too early. And this is a problem for a huge amount of traders. They get the direction of the trend right, the market comes back, stops them out, and the trend goes back the way they thought, and they're not in the trade. So it's a balance. You have to preserve equity and learn where to put your stop loss so you can stay with the trade and not get stopped out too early. Now, the key error that beginners make when they come into Forex trading is to try and trade with too tight a stop loss. You see a lot of traders coming in trying to trade with 20 or 30 pip stop losses. That is a total waste of time and will ensure the trader loses. And it's grown up that you can do this, the idea, with the day trading myth and the scalping myth, that you can predict what's going to happen in a few hours and get those, small profits, just keep scalping them out the market and trade with a very tight stop loss. It doesn't work. It's all a myth. All volatility within a day is random, and if you try it, you will basically just end up losing your account over time. Currency pairs have a volatility of probably 100 pips plus a day. So trading with 20 to 30 pips is basically going to see you get wiped out. Now, in terms of the size of stop loss, I just want to go through just some general idea of size here. It depends on the strategy you use. If you're following those big long-term trends, last for weeks, you're probably going to use a stop loss of 150 to 300 pips. You're focusing on the long term. You want to stay out of the retracements in the trend. So use a wide stop loss. In terms of trading overbought and oversold when markets have been pushed too far, the stop can be tighter because obviously you're coming off levels that are very specific. I would say your stop loss there will probably be about 50 to 150 pips. Now, in terms of those stop loss sizes, they sound like they're quite wide, but the profit potential in long-term trends can be thousands of pips, and in overbought and oversold scenarios, you can easily get 300 pips or more. So you've got a 2 to 1 to 3 to 1 profit to your loss, i.e. your stop loss to your profit objective. Now, if you consider that most decent Forex traders who learnt their art will win on about 50% of their trades, that will ensure you make profits over time. The key when doing a stop loss is obviously not to risk too much of your account equity. You don't blow up your account. So what you'll do, this is just a general recommendation, risk about 2 to 3% of your total account to a stop on one trade. You can vary this, up or down, but 2 to 3%, that will ensure longevity. Okay. Now, when you're risking 2 to 3% to your stop, you will basically need, in many instances, to keep your leverage down, and it's a good thing to do. Over leveraging with tight stops is just another reason why beginners lose. They're in too much of a hurry to make money. Use a sensible distance between your entry and your stop, and use leverage which is not basically going to risk a blow up of your account. Now, in terms of placing stop losses, I'm all in favour in trend following of putting them behind where everyone else has got their stops. What you don't want to be is too close and get stopped out with the herd. Okay, you find this all the time. People enter long-term trends, they want to put their stop losses tight, then the market takes them out, then it goes back the way they thought. So you want to be generally the second level back. So you look at the first major level of support or resistance, then go behind the second one. In terms of trading turning points, never trade with just a few pips behind a key level of support and resistance. You need to give it room. Okay, a lot of traders and trading turning points will be 10 pips behind the level. Don't do this. Have your stop at least 50 pips back, probably even more if you're confident in the signal, to allow those traders who put their stops too close to get taken out the market. I think if you're trading, with stop losses, you really need to focus on keeping them out the way of those stop clusters. The crowd are very often right about the direction of where a currency pair will go. The problem they have is they get stopped out too early. And I think that is one of the keys to trading success. You have to give yourself decent protection, but not get stopped out too early. In terms of locking in profits and so forth, what you should do is every day you should review your target and stop loss where it is. The markets are fluid. A lot of traders put in a trade, set a target, set a stop loss, and either one or the other gets hit. You don't want to do that. The market is changing all the time, so you need to move your stop loss to protect. And sometimes it might be an idea, let's say the market is not moving in your favor, you've only got a minor profit or a minor loss, is simply to put your stop loss at the market and exit the trade. So in terms of stop losses, to conclude, you need to give a realistic amount of room away from your entry price. You need to basically make sure you keep your leverage low, and also all the time think about where other people place their stops. Keep out the way of them. And finally, as I've just said, make sure you review your stop each day. It's just a basic intro to stop loss and a simple strategy to help you achieve trading success. If you've got any questions or queries, please feel free to contact me at any time. Thank you.